Welcome to Meet the Visionaries, a real estate podcast from MIT Center for Real Estate. In this series, we speak to leading voices in real estate about trends, challenges, and opportunities shaping the market today. This is Shagun Kalra. I'm a final year student at MIT. And today we're joined by Chris Bilotto, President and CEO of Diversified Healthcare Trust, or as we're going to mention in the podcast today, DHC. It's a REIT that's focused on high-quality healthcare properties across the United States. DHC manages a portfolio of $6.8 billion, spanning across medical offices, life science labs, and senior housing communities in 34 states and also in Washington, D.C. Their assets serve a broad spectrum of healthcare providers and residents. Chris leads this diverse portfolio, focusing on growth, operational enhancement, and strategic initiatives in a sector that I think touches millions of lives today. Chris, you have around 20 years of experience in real estate. Your expertise lies in development, portfolio, and asset management. This past summer, I had the opportunity of working with you directly, and I think it was a great experience to learn from you and hear your vision about creating better and vibrant communities. I'm personally very excited about today's conversation. Chris, thank you for joining us today.
Yeah, thank you for having me. This is exciting. I appreciate it.
So before we dive in, can you give our listeners a snapshot of DHC and what excites you about healthcare?
Yeah, absolutely. So DHC, Diversified Healthcare Trust, is a healthcare company. We primarily focus in three different verticals, including life science properties, medical office buildings, and senior housing facilities. The company has been in place for north of 20 years, and certainly across that time frame, we've navigated with respect to our business model and operations. And I think sitting here today, are more heavily weighted towards the SHOP or senior housing side of our business. And so, it's certainly an exciting time for the company, not only from, what we're doing across the organization, which we'll talk about, but generally speaking, as we think about healthcare trends and some of the drivers and, in addition to just the real estate, kind of the human element and kind of how we think of the business. So looking forward to talking about it.
Yeah. Before we dive into DHC itself, I'd love to start with your personal journey. You spent so much time of your career in real estate. What is exactly about healthcare that inspired you and what excites you about the sector?
Yeah, there's a couple of things. If you go back in my real estate journey, despite some of the things I do today, I started in a very different place. I was in the retail business very early on, which is a service business. And I think that applies to what I do today, despite being in the brick and mortar, being in the operations side with senior housing, and even on the medical side and working with practitioners and doctors. There's a very kind of customer-focused service type initiative akin to that. So I think it aligns well operationally early in my career, and over time with asset management and other services, was able to kind of have a more hands-on approach to the business, which applies to, again, kind of how we are structured and operate today. And so, I think the combination of kind of that experience and where the opportunity was at the time, when I joined the company going on a couple of years from now, just created a lot of synergies, especially for, where we were, where we needed to go, and sitting here today where we're going.
And in your previous experience, is there anything that drives your leadership even today?
Yeah, this is what I would tell anyone I work with. I'm not bashful to ask questions. There's a lot I don't know. There's a lot I've learned, but things change, and being comfortable with asking basic questions in and around the company, whether it's through different individuals across teams, whether it's through external resources, through banking relationships with our investors, I think is something that has guided me.
I think I learned that even when working briefly with you, that you had so many questions. That was one thing that I took away myself. So healthcare is shifting so much, and it's becoming such an integral part of real estate today. So many investors, they're interested in data centers and also senior healthcare living. How do you see DHC as an owner, as an enabler, or as part of that, shifting that demographics?
We're certainly an owner. At its core, we own the brick and mortar of the business, but I would advocate that We're also a partner in the business, specifically when you think about senior housing, you're dealing with operators and the structure of those, we share in the upside, right? The EBITDA flows through depending on the performance of the business. And so being a good steward and a good partner as part of that, I think is key. Outside of that, as we think about other ways to think about the business, perhaps being an enabler, as we think about things around technology and information we have available to us,
And
how we
today,
can use that to inform decisions, whether it's what we're doing today or for things around us. Generally speaking, is another way I would say we can kind of look at the business. As a healthcare company or as a real estate company, we're an owner at core. But again, I would advocate that those other areas complement what we do pretty well.
sure. And so let's talk about DHC more. It's a unique platform with assets ranging from, as you said, senior housing, medical offices, life science. Managing a portfolio that's that brings its own challenges and opportunities. So learning from different kinds of assets that you own, is there anything that translates from one asset class to the other?
Yeah, I mean, there's a lot of synergies with respect to the different asset classes. I mean, certainly, again, going back to the comment about the brick and mortar, things around market fundamentals, kind of what they say in marketing, location, and kind of how that informs or drives a business. I
And
think
today,
is key. And again, it's going to be specific to any one vertical. Some complement others. But, more generally speaking, the medical office side of the business and the senior housing side of the business, a lot of fundamentals of shared synergies around an aging demographic and kind of the needs bases that come with that, whether it's certain care, with outpatient facilities and other types of real estate we own, or even as you get further into your life's journey and consider senior housing and similar alternatives, that side of the business, there's a lot of complementary aspects of how the businesses operate and feed off each other more specifically. And I would say life science, while it's a smaller part of our business, is not dissimilar, but is obviously heavily more weighted towards research and kind of, science related to driving cures or efficiencies or other things to kind of help inform overall health. And again, kind of those synergies, while not directly correlated on the real estate side between, MOB and SHOP, probably more correlated, definitely offer kind of strong fundamentals around just, having that within the portfolio.
DHC is managed by RMR. Do you want to explain that structure for our listeners? And how do you think that influences just decision making?
Sure. So as you commented on, DHC is an externally managed REIT. It's not an uncommon structure. It just kind of varies more specifically. And I think that the best way to put it is, the DHC, the company, is governed by a board of directors and senior executives or a C-suite, but the day-to-day operations of the business is governed or managed by the RMR Group. So think about things around originations, capital raising, property management. Again, with the senior housing, we work with third-party operators. And so, those day-to-day responsibilities are managed by the RMR Group. And with that structure, I'm also with the senior leadership team on the RMR Group. So I oversee various verticals at the company, and many of which support DHC and its operating model. And so there's direct synergies as far as how that correlates. But I think the better way to think about it is,
And
we've
today,
got a shared services platform, so we can kind of access, different areas of the structure at any given time, despite where the journey is with the operating business. And so there's a lot of shared synergies and costs and other endeavors that support the structure that we have.
okay. And looking at the property themselves, I think operations is a big part of how you manage its senior living facilities. I read that 116 communities, the SHOP communities, were being transferred from Ares Life to externally managed. Can you talk about the thinking behind that?
There's two components to Alaris Life. One, we own 34% of Alaris Life, and so that's kind of an affiliated business of ours. They managed, as you commented on, 116 properties, which represents about half of our senior housing pool. And then we have relationships with 10 other individual operators. And really, the sale of that business was predicated on a couple of things. I think for Alaris Life, it's a national company. And, I think they would argue that They have certain expertise and skill sets in certain markets and a kind of less penetration or management of properties in other markets. So, for example, you can say like a Pacific Northwest, they have a few communities. And so managing that infrastructure on a national scale can be more costly because it requires certain overhead or certain other dynamics. And so, there were changes in their business they would have to consider to just be to grow the business and be a broader operator. And that included maybe getting out of some markets, investing in the company. And I think kind of the punchline is that at the end, just looking at where the market is today, it was a good opportunity for them to exit, sell the business, sell the management contract, sell the brick and mortar real estate that they own. And in turn, for DHC, what that does is that creates an opportunity for us to diversify our operations with what I would call kind of more local sharpshooters, companies who have a broader presence in the market. And in doing so, that opens up doors to kind of grow the business. So, grow occupancy, grow NOI margins, et cetera. And then out of the gate, that also offers an opportunity for us to benefit from their platform where all the cost structure is in place and they don't have to take on incremental human capital or other elements to manage our properties. And so we see the benefit of the flow through that comes with that. So just, it's one of those things. And this is, and there's probably varying views, but I think that, working with operators that have kind of a more or a deeper knowledge of a market or more dialed in, I think in this particular space can produce positive outcomes. And so we've done just that, or get the benefit of that as a layer of sales on one side of this business. We take on the relationship with these 7 new operators. And then it also helps with the overall narrative of DHC with respect to the story and kind of the journey that we're on.
The Q2 of 2025, there was a upward trend in NOI and also in occupancy. What do you think were the key levers that drive that performance?
Yeah, there's a couple things. We've been, we've made some strategic shifts over the years. I mean, going post COVID, but going back to like 2021, where we, diversified our operators initially. We identified opportunities to invest in our communities, which, just again, took varying levels of capital for renovations or back of house, et cetera. So over time, we've been kind of in a rebuilding mode with respect to, the communities themselves, looking at opportunities with our balance sheet and in putting us in a position where we can kind of benefit from broader EBITDA growth through shops specifically. And again, there's the other side of the business too with MOB and life science, which again, continues to be an important part of the structure. But nonetheless, where we're at today is now that we have that infrastructure in place, we've made the investment that yields benefits in the sense of, driving more residents to our communities and ultimately helping grow cash flow or EBITDA. And so there's also the tailwinds of the overall industry. I don't want to, lose sight of that. I think the business, generally speaking, has continued to improve. You may be aware, more generally, it's been a little bit more of a challenging environment to support development. So there's a supply-demand imbalance, allowing, owners of real estate to invest in their real estate they own and capture that demand directly. And that's been another benefit and tailwind that I think from the work we've done and the time we've spent, we're starting to kind of capture that upsides. It's a combination of things. I think we have more room to grow. And certainly a byproduct of that will be from the relationship with these new operators and again, kind of continuing down the path on the journey.
And a lot of that growth also came through deleveraging while recycling a lot of your assets. So how do you maintain the conviction on long-term strategy when the market is so volatile, it's changing every quarter?
Yeah, I think, for us, as you touched on, deleveraging is key. Deleveraging is going to come through divestment. I mean, come through various sources, but for us, it's, through selling properties, financing at more accretive rates, certainly improving performance. EBITDA in itself will help deleverage and kind of get us into a scenario where we're hitting our leverage targets. And again, we've been making meaningful progress there. It's all part of the business plan and the strategy that we kicked off over the last several years. But look, I think with anything, spending time with market participants, we're often in the transaction market. So I think it kind of gives us a front row seat into some of the dynamics and what's going on and gives us a little bit more visibility on thoughts on timing around when might be the time to sell something, when we should consider alternatives with refinancing, when we think about growth and what aspects of growth that may entail. And so I think it's, just given the real-time nature of what we do, I think we get that benefit. But for us, we've been net sellers through 2025. I think that's where that kind of concludes. As we go into 2026, we're going to be in a position where we have, our maturity wall is pretty spread out. Our next large maturity after our January maturities that we're paying off is in 2028. So it gives us kind of a 2-year runway to focus on other aspects of the business. Again, a lot of what we talked about, improving our shop portfolio, leasing space in our medical office portfolio, and I think generally speaking, putting us in a position of offense for growth in other areas, whether it's buying assets, having dialogue around our dividend, et cetera. It really kind of opens kind of the next chapter in the business cycle for us.
And financing also remains a big part of conversations today. So how are you managing debt and liquidity?
We've done a lot of financing. We spent a lot of time in the markets over the last couple of years, and I would say even more so in 2025. When I think about markets, I think about capital markets in the form of dispositions. I think about, the fixed income market, and I think about more traditional financing. So in the realm of agency financing, and we've done north of $1 billion in 2025. And so I think the market from a financing standpoint remains very liquid and available. Certainly with respect to the product type that we have, I think it's in favor. And there's just heightened demand around medical office and shop. And so I think that is a value proposition. We've obviously seen where rates have gone and kind of trended down, which has been favorable. And that's great for commercial real estate. And so I think kind of the culmination of those things have allowed us to have a lot of complementary and favorable execution during the year, which kind of positions us for the go forward.
And looking at the risk and opportunities, what is your personal investment thesis when you're looking at where to put your money in?
Yeah, I think it depends on where the cycle is, right? I think today for us, there still remains attractive opportunities on the acquisition side. We haven't been in the acquisitions market, but that's something we could see as we go forward. As we measure risk, I think even for our portfolio, there's a lot of embedded opportunities, kind of going back to what I mentioned around investment we have been making. There's still more of that. And so I think for us, we see there's outside returns and, adding additional acuity to our senior housing. Again, the more organic side of the business, if you're leasing space on the MOB side of the business. And so I think it's more around just looking where we can kind of get the right return for our business. And again, what the execution entails to do that. And certainly being in a position where we can kind of grow, cash flow and returns organically, I think is a more manageable side of the business. But it's not to say going outside through acquisitions or other forms of growth aren't also of consideration. Again, it just, in our view, it's more of a kind of a market timing dynamic and where the business is at the time.
I think DHC is very well positioned in healthcare real estate today. We hear every day about the rising age of American population, and we haven't seen much innovation when it comes to specifically senior living. For example, retail was so much about just mom and pop stores, and now it's changed to experience. If you think of Apple stores, Lululemon, if you think of hospitality, that went through a lot of innovation where it's mostly about wellness. Do you think healthcare is leading the city down the same path?
I think in various forms, it'll certainly go down the same path. I mean, if you look at healthcare there's been a huge migration to outpatient facilities over the last 10 years. And so kind of getting outside of the hospital campuses, getting closer to, the users or the residents. And that's been kind of a big trend. And when you take it a step further, thinking about, healthcare real estate in the form of imaging, dialysis, urgent care centers, not only are those out kind of closer to the residents or more in kind of the suburban or urban infill areas, you're also seeing those find a way into retail type settings, right? As you think about the experience in retail and what some of those offerings might bring just from a customer satisfaction standpoint, I think that's another area where, again, you're seeing certain aspects of healthcare find their way into other areas or other sectors. And it's not indifferent, I think, with, senior housing. And this is not new, but there's certain things around nutrition. There's certain things about rehabilitation that we do in our communities. And in some cases, there could be access to doctor services, but nonetheless, at minimum, you have services around shuttles and other things that are amenities for the building. And so while maybe not directly in the building offering a level of amenity or access to that service to make it more convenient, I think are all the consistent types of trends around the business that we're seeing from kind of, I think, broader exposure and broader use cases as far as where is real estate's going.
So, Chris, I want to focus on a little bit about the human side of healthcare real estate. It's hard not to talk about what sets healthcare real estate apart, as it's such an integral part of our demographics. These spaces aren't just assets, they're homes for people, they're workspaces, and they impact everyday life. Healthcare communities are homes for residents in sensitive ages of their life. How do you measure your success beyond just net operating income?
I mean, I think, you kind of touched on it. This is a very kind of people forward business. Success for us, it varies. I mean, certainly as you think about senior housing, these are homes for the people. And so I think success is around finding the right partners to kind of help you in the form of kind of operations. So for our business, we have what we call third-party operators.
Mm-hmm.
And those operators have a significant amount of experience in managing senior housing and providing the right care. And again, it doesn't just stop with just the operations. I think it's about the people. What I find most often, when I tour these communities is, the residents at the communities have a really strong relationship with the teams at the communities. Again, these are an extension of their families, both, residents and other residents, and again, the teams at the communities. And so I think more specifically, when we think about senior housing, it's about providing the right level of care, providing the right setting, thinking about the offerings that you have in a community and what can make these people most happy on kind of their journey of this being their home, and then services, I think, to complement that. And so I would say specifically for the senior housing side of the business, it very much is a people side. And again, it comes back to the partners that we work with.
And being developers and investors here at the center, it's going to be helpful for you to hear from you. How can we better design these spaces?
It varies drastically. I think, to be transparent, we haven't been developers specifically on the senior housing side of the business, but I think about even kind of what we own, and as we're thinking about investment in kind of a repositioning of the asset or redevelopment, again, with senior housing, I think we spend a lot of time on the functionality of the building with respect to communal areas, thinking about ways for mobility around, the best way for residents to kind of traverse and work their way through the community, and kind of what the touch points are along the way. I think it goes back to kind of what I just mentioned a minute ago. It's not just about just the development. I mean, I think in senior housing, a lot of the amenities are fairly consistent around what you can offer, what might be specific for the market, and then kind of what outsized offerings you can provide. But I think also the activation of the community and what you can do to create kind of a successful kind of happy journey while being at the community in the form of social hour or marketing events and kind of different programming, I think is also a big part of a successful, community. And so certainly, being thoughtful around the brick and mortar and kind of how you can integrate, again, the things I mentioned and certain technologies and kind of adaptability for change over time are key. But I would say the programming is also a big part of that.
And I think the AI and technology are going to play a big role when it comes to how these communities are going to be designed or managed in the future. How is DHC capturing these latest trends that we have in the technology?
We're spending time on different levels of analyses using AI, and that can be in the form of market research or other dynamics to kind of help us get to a better starting line to help inform a decision on a go forward basis while we are doing this. But I would say earlier on is more around kind of the data analyses and kind of spending time using AI and other technology tools to kind of help us understand the information. As you can imagine, with our company being both on the real estate side and the operator side, at least having access, we have access to a lot of data. And so being thoughtful around what information we can pull together to guide various trends or themes or decisions around what we want to do next or what can best position us to be successful, to drive residents to the community, to engage with the people making decisions for the parents that might be going in the community, all the above is kind of the next wave, the next chapter. But I feel like, spending a lot of time out in the market, talking to other owners or being at different, real estate conventions, I feel like we're pretty far ahead of the curve in the types of things we're doing or trying to do. But again, it's probably not indifferent. There's a lot of work around AI, a lot to figure out. It's pretty exciting. I think we're very happy with where we're at least as far as what we're doing today.
Yeah. Given that so much data is accessible to DHC and to RMR, what do you think owners and investors are not looking that you guys are looking at, and what sets you apart?
I think every owner has kind of a different, or different owners have different investment thesis, so it's going to vary. I think for us, more specifically, as we think about technology or just kind of on a go forward basis, we're often just looking at how to manage risk, and that can come in a lot of different forms, and kind of how you prepare for the next journey, whether it's next year, 10 years, and whatever it may be. And so a lot of our time is spent around doing exactly that, whether it's through information that we have access to, whether it's through being out in the market, having conversations, talking to owners, operators, talking to residents, talking to doctors. And then again, I hope that keeps us ahead of the curve, and we'll keep an eye out for what others might be doing as well.
And zooming out and looking at your leadership and your purpose, you've driven DHC through a period of change. How do you personally define success in a profession that's a combination of both capital and care?
Well, I think the success on the capital side, I think, is going to be largely governed by performance, right? I mean, we're a public company. We have shareholders, and, certainly looking at ways where we can kind of improve shareholder value is first and foremost. And so a lot of what we do in that definition of success is, looking to our stock price or our relationships and ensuring that those are going in the right direction. And we spend a lot of time internally and externally, with the investment community, really trying to kind of have the right conversations, listening, being transparent, and thinking about ways that we can kind of take that feedback and kind of continue to move, the company forward. On the other side, with respect to the operational side and providing care, again, it's looking at kind of the whole journey and kind of the care endeavor. It's about spending time in the communities, talking to the residents, talking to the team, spending time with our operators, looking at, different things around the feedback we're getting, right? Whether it's through the public domains or generally around how people rate our communities. It's about talking to the decision makers that are, making those important decisions around the care for their loved ones and how they view either the product that we have or making decisions in general, and being able to react to that. So it's really kind of a mix as far as, how we would look at it. And I think there's a lot of people kind of involved in that process and how we do it. But nonetheless, I think that's how I guide that answer.
Okay. And is there any one misconception about healthcare real estate that you wish other people would understand?
I don't know that there's a single misconception.
We can talk about multiple.
Yeah. I think it varies. All sectors vary. And I think it goes back to a lot of the theme we talked about today. I would say all business is a people business in various aspects, but I would advocate that healthcare lends itself to the more of the people side, right? Even if you're not in the senior housing where we talked a lot about that direct connection point and what it means for a resident. But if you're solely focused on, let's just call it the MOB, and you're dealing with practitioners, even early in my career, I spent a lot of time in operations and transaction where I would interface a lot with doctors and spend time at the buildings and talking about their business plans and their needs. And I think that, there's a lot that could be gained from that. And so it's unlike, the fact that you're dealing with traditional leases and governing documents. I think being on the other side and spending the time with, the decision makers and kind of how they're going to be able to kind of use the space, what their needs are, what their goals are. I think that's something that is more intricate in the healthcare side, medical office more specifically, than maybe understood with other sectors.
And we're in such an uncertain time, so it's unfair to talk about the next 5 to 7 years, because talking about 2026 summer, I think we're going to be wrong in that. But is there any white space that DHC is looking to fill in the near-term future in healthcare?
I don't know specifically in healthcare, kind of more directly. I think that, we spent the last couple of years kind of doing a kind of top to bottom comprehensive review of the company, the goals, the things we wanted to achieve. I think we're, far into that journey. For us, it's very much about, being thoughtful with probably what's in front of us a little bit more near term. We have a lot of opportunity over the next 18 to 24 months to really improve the business. And again, that's borne by the fact that we've done a lot of work and kind of foundational improvements, whether it's to our balance sheet, whether it's to the assets themselves, the relationships that we've built, a lot of the dialogue we've had today. So I think for us, kind of filling that space or that white space is more around looking at creative ways to peel back layers with what we have and unlock value initially through that. I think we'll get there over the next 12 to 24 months, or at least see material improvement in that process and in that journey. And then from there, hopefully be in a position where we're looking again 5-10 years out. But I think one feeds off the other. And so it's not that we're not thinking about that far out. I think we just have a lot of opportunity in front of us early on.
So we're at MIT. A lot of students, researchers here are working on physical environments and also the technology side of it. And if you could give one piece of advice for people who are someone looking at advancing or innovate in healthcare real estate today, what would it be?
I mean, my reaction to that is, I would say, get a little bit more granular. I know there's a lot of opportunities to do research, to use resources that are in front of us, and again, whether it's technology or other tools that are afforded to us. But I find the best ways to kind of look at opportunities are to talk to people on the ground. I mean, it kind of goes back to some of the other things we discussed a little bit, but I think the more you can have interaction, again, with the people making decisions or the people thinking about the needs or providing the care, if it's in, kind of the healthcare side, is very informative. And I think that can, stir up a lot of ideas and conversations and again, can inform some of that directive.
Well, thank you, Chris. I think this was a great conversation. I'm very excited about all the work that DHC is doing, and I'm going to be looking forward to everything that you're adding to your portfolio.
Senior, how much? Sure. I appreciate you having me.
Thank you, Chris.
Thanks to our listeners for tuning into another edition of Meet the Visionaries podcast. And please remember to stay tuned for future episodes by subscribing to our podcast or follow us on social media by visiting cre.mit.edu to learn more. Until next time, take care, listeners.